Heikin-Ashi Candles, extremely powerful but often used wrong. Today, I'll show you how to utilize the power of Heikin-Ashi to capture your biggest wins yet. And welcome back, my name is Krisha. Now let's dive right into Heikin-Ashi. Now if I'm being completely honest with you, if used correctly, Heikin-Ashi are probably one of the most powerful momentum indicators out there. And what does momentum really help us with? It's going to help us ride our winners without getting shook out. It's also going to tell us when it's a good time to be waiting on a better bid. A lot of times, guys, especially in bull markets, you're going to see these rapid moves to the upside, and then you're there left without position. You're wondering, should I be buying in right now or should I wait on a pullback? Getting a firm grasp on momentum also is going to help us spot trend reversal. Yes, a very important lesson. Oftentimes I find traders saying that, oh, because I have so much in unrealized profits, this is money that I can pretty much gamble away with. It's not my money, it's the money that the market gave me. I don't care if it is unrealized profits. Those are profits that are yours to keep. It is your money. Question is, do you know when it's time to be taking profits off the table? Yes, Heikin-Ashi can actually help with all of this really cool information. So to circle back into point number one, how can Heikin-Ashi candles really help us ride our winners without getting shook out? Heikin-Ashi translates to the average bar. Now you're probably wondering, well, the average of what bar? Well, it's the average of the regular candlestick bars. They're literally comparing averages, and that's how this chart is drawn out, right? This is what makes the trend so smooth. That's why you're seeing the green candles in rapid succession, the red candles in rapid succession. It makes it a lot more easier for traders to analyze the trend. But is this all you need to know? No, because I believe that the true magic of Heikin-Ashi that's going to give you that conviction is in knowing how these averages are actually calculated. So let me show you how that's done. Here are two Heikin-Ashi candlesticks. The first thing you need to know are the four components of any candlestick, right? Which is the open, the close, the high, and the low. Now, the open of any Heikin-Ashi candlestick is always relative to what came before. Every Heikin-Ashi candlestick opens at the midpoint of the previous candle. Let's say for this candle right here, they basically take the entire body. Okay, they take the average, which is a midpoint right there, and then the next candle literally starts at that midpoint. You guys can go ahead on over to any Heikin-Ashi candle and check this out. The open of any Heikin-Ashi candle always starts at the midpoint of the previous candle that came before. Now, as far as the close of any Heikin-Ashi candle is concerned, now let's just take this candle since we're dealing with these two candles right here. Right, let's just take this candle right here. As far as the close is concerned of any Heikin-Ashi candle, it's actually really novel. It's literally the average. All right, they take all four numbers. They take your open, your close, your high, and your low, and all they do is they divide it by 4. Literally, just smack in between, they just take the average, and that is your close. Now, what I really like about this system is that it gives me so much information on the momentum just by grabbing onto the averages. To think that the open always lines up with the midpoint of the previous candle, I know that as a bull, I want to see that next candle really show me some power. Now, if I am bullish on this asset and I can see that the close is significantly greater than the open, I know that the average of this current candle is significantly greater than the average of the previous one. Right? As a bull, that is confidence inducing. That gives me more conviction in that this asset wants to start moving to the upside even more. But is that enough? Is that all the information it gives us? No, it gets even more bullish than this. Because now if you consider the high and the low, as far as the high is concerned, it literally takes the highest price point that the asset got up to in that candle. Right, between the open, the close, and the high, it's always going to take the maximum price achieved in that time slot. Now, as far as the low is concerned, this is important, so listen up. Oftentimes, you're going to find bars like this where there are no wicks. It's like the open is in line with the low, right? How does that work? Well, that's because they're grabbing at minimums. Now, what do I mean by that? Now recall, Heikin-Ashi candles are simply just averages of the actual candle playing out. Now, for example's sake, let's assume that this candle right here, okay, opened at $2. However, $2 has nothing to do with the price action that took place on this candle. $2 is simply just a representation of the midpoint of the previous one. So when you do not see a wick, the lowest point of the candle didn't even get down to the average of the previous one, right? The buyer stepped in right away and picked price up, right? That is bullish momentum. And so when you see candles that do not have a bottom wick, right? And it's just green with such a big, huge momentum-like candle that's giving you added confirmation on this bullish move wanting to continue, in that the bulls are completely, utterly in control. Now, the two candles that I grabbed were these two right here. And you can see that this actually saw continuation to the upside, yielding traders another 40% to the upside, right? So that shows bullish strength. Which brings us to point number 2, in that Heikin-Ashi candles can also tell us when it's a good time to be waiting on a better bid. Now let's quickly recap what we've gone over so far. We know that Heikin-Ashi candles translates to the average bar. It's often a great tool to gauge the momentum of any asset that you're trading. We also now know how these averages are calculated, and in addition to that, we know that no wick equals strong momentum. However, it depends on where you see no wick that will give you an idea of strong or weak momentum. Now, I want you guys to think of context in terms of trends, and the two trends that we're going to be dealing with are these: the uptrend and the downtrend. The trend is your context. Heikin-Ashi is simply a tool to get you into more profitable trades. Tools cannot be used in isolation because they are useless. Just how you wouldn't bring a wrench to hit a nail into the wall, you shouldn't be using Heikin-Ashi in isolation. Context is important. Context is what gets you into profitable trades. Now, we know that no wick equals strong momentum. However, how does that apply to the uptrend? Well, let's break this down into a step process. What we are trying to do is make Heikin-Ashi more actionable. Right? So step number 1 of making Heikin-Ashi more actionable on an uptrend is, well, identify the uptrend. How do you identify the uptrend? Well, look for higher highs and higher lows. You're looking for price action that looks something like this, all right? Higher highs and higher lows on each ebb and flow. That is your uptrend. Now, as soon as you've established an uptrend, step number 2 is spot the wicks. If you find that there is no bottom wick, okay, in the middle of an uptrend, you know that that is strong bullish momentum. For instance, in this uptrend right here, we saw a series of no bottom wicks. All right, on even the second uptrend right here, no bottom wicks. All right, that shows you strong bullish momentum when you do spot them on the chart. However, on the flip side, if there are bottom wicks, so yes to bottom wicks, that tells us that, hey, momentum is now weakening out. This is a good time for you to be looking for a pullback on the chart. Now, to demonstrate how that's worked out, let's zoom into price action. Now, observe step number 1, identifying the uptrend. Bitcoin was in an uptrend right here where we were putting in a series of higher highs and higher lows. And notice, throughout the entire impulsive move from $27,000 all the way up to $42,000, there were no bottom wicks on any of the Heikin-Ashi candles until we started seeing bottom wicks on these candles right here. All right, that showed us that, hey, momentum is dying out. This is a good time to be looking for a pullback opportunity. And did we get a pullback? Yes, we did. We saw another meltdown from wick to wick of 21% on Bitcoin. Now, even on the next phase of the trend, notice what happened. On the impulsive moves, there were no wicks to the upside until we actually started seeing wicks in earnest, telling us, hey, this is a good time to be looking for a pullback opportunity. And did we see a pullback on Bitcoin? Yes, we did. From the top all the way to the bottom wick, that was a good 18% on that pullback. Once again, yielding traders a better bid opportunity on Bitcoin. So now remember, to make Heikin-Ashi candles more actionable, if you are a bull, the first thing you want to do is identify the uptrend. After that, spot the wicks. If there are no bottom wicks, you know that, hey, you are staring at something with strong bullish momentum. That asset is likely going to start seeing continuation to the upside. However, if you do start seeing bottom wicks in the middle of an uptrend, you're seeing weak momentum on the chart, at which point you can then look for a pullback opportunity. But now, how does no wick equal strong momentum translate onto the downtrend, and how can we best use Heikin-Ashi candles to spot better bids on the chart as well as help us spot a continuation of a downtrend? Well, it's fairly straightforward. We take everything that we learned from the uptrend and we literally just flip it on its head. To make Heikin-Ashi candles more actionable in a downtrend, step number 1 is to, well, spot the downtrend. And in a downtrend, guys, you're looking for a series of lower highs and lower lows. You are looking for a trend that looks something like this, where every subsequent low was lower than the previous one and every subsequent high was also lower than the previous high. This is your downtrend. For example, this is ETH/USD in a downtrend where it was putting in a series of lower highs and lower lows on its chart. Step number 2 is to spot the wicks. However, unlike the uptrend, in a downtrend, when there is no top wick, that shows you strong bearish momentum. So as far as no wick equals strong momentum is concerned, you want to see candles that look like this, all right, where there is no wick to the upside. So no top wicks shows you strong bearish momentum in the middle of a downtrend. Because recall, the Heikin-Ashi calculation entails that the highest point that each one of these candles got up to was still significantly lower than the average of the previous one, which is why we do not see a top wick on any one of these candles. So when you spot something like this in the middle of a downtrend, it often signals the downtrend continues further. However, on the flip side, if there are top wicks, so yes to top wicks, that signals weak bearish momentum, at which point you can either look for a relief rally or a trend reversal. Now observe step number 1 on ETH/USD, Ethereum in a downtrend where it was putting in a series of lower highs and lower lows on its trend. Now notice the drop from $800 all the way down to $300 Ethereum. There were no top wicks to be found on any of the Heikin-Ashi candles right there, showing strong bearish momentum. It is only when we started observing top wicks in earnest, plus green candles in this instance, that we actually saw Ethereum give us a relief rally all the way up to $820. And notice that on the second wave of the continuation of the downtrend, every time ETH/USD actually did see wicks on that downtrend, that often signaled that, hey, the bears were losing momentum. This is a good time to either be looking for a relief rally or a pause in the trend, as it did right here, until the downtrend continued. And once again, on the downtrend, I want you guys to notice there were no top wicks on the downtrend signaling strong bearish momentum. It's only when we started seeing wicks once again telling us that, hey, you could either look for a relief rally or a pause in the trend because the bears have lost momentum for the interim. Now, if we are looking for trend reversal, it is very, very important to see strong bearish momentum being overcome by strong bullish momentum. So in the middle of a downtrend, when you spot wicks like this one right here, that is not good enough to call for trend reversal. What you want to see instead is, yes, wicks to the upside, but in addition to that, you want to see those strong candle bodies telling you that, hey, the candles are significantly outperforming the bearish candles that came before it. An example of potential trend reversal would be this phase right here, where on this downtrend, notice how we started seeing wicks, but not only did we see wicks to the upside, notice the bodies of those candles, the magnitude of those candles, telling us that, hey, the average of all of these candles was significantly greater than what came before it on that bearish move to the downside. Right? This is the kind of momentum you want to see on trend reversal. So to quickly recap what we've gone over, this equation of no wick equals strong momentum is extremely weak without any context. Remember, Heikin-Ashi is simply but a tool. Knowing when to use it is going to get you into those most profitable trades. The best way to use Heikin-Ashi candles is in combination with our trends. In an uptrend, when you spot no bottom wick, that shows you strong momentum, at which point you can actually look for a continuation to the upside. However, in a downtrend, when you spot no top wick, that shows you strong momentum, wherein you can then look for a continuation to the downside. This is a quick cheat that you can use for Heikin-Ashi candles, so if you'd like to take a screenshot of it, go ahead and do so. Now, this is just the tip of the iceberg on how you can use Heikin-Ashi candles to get you into some profitable trades. Additionally, if you want to learn how you can best trade Heikin-Ashi candles with more context other than trends, you can check out the Mango Sprouts program. This program will offer you structure on how you can best profit from these markets, and so far students have found it absolutely amazing, and the structure has helped people save a lot of time in learning the foundations to these advanced trading techniques. There are modules on mastering candlestick analysis as well as precision support and resistance trading, another great tool that works very well with Heikin-Ashi candles. So if you're someone looking to take your trading up to the next level, but you also want a stress-free approach to it, then I definitely suggest checking out the Sprouts program. Now, if you guys enjoyed this video on Heikin-Ashi candles and you found some value from it, one way of giving back is honestly just hit the like button, because it goes a very, very long way. And if you think that this video might help someone else out there, don't hesitate to share it. I'm hoping to see you in the Discord chat. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.